I am Julia Carlson. I'm the CEO and founder here at Financial Freedom Wealth Management Group. Today, I am going to share 5 ways to prepare for market volatility. Yes, the stock market, as we approach the fall season here, will most likely bring volatility back. Historically, September and October are just more volatile, more pullbacks in the market happen in September, October. And here's the thing, there's nothing to fear. We just need to be educated and learn to, I think, look at this market volatility in a different way. It is part of the investing experience. And if we can train ourselves to really expect the market to be down, then that will take, it just helps take the panic out of it, if you will. Okay, so let's talk about these 5 ways. So number 1, set realistic expectations up front. Yes, so when you become an investor, whether it's through your retirement plan at work, it could be with us. We help a lot of clients with their investments. It could be you are getting close to retirement and you've built your nest egg and you're considering, moving into retirement and what to do about your investments. Lots of different things. A lot of us are investors, and as we should be, to build wealth for the future. But when we set our expectations up front, we want to know, or it's good to know that your accounts, on average, will be down about 20% of the time. So, if we think about a year, then we think about, probably 2 to 3 months, the markets will be down. We have been, since I'd say about 18 months now, since the bear market during COVID, we have not really seen major pullbacks. So a pullback would be completely normal this fall. So if we can expect to see that, then we won't be disappointed really in our investments. It's just part of the investing process. So in fact, more people, when the markets are down, we would think that more people would come in and buy, because if you think about it, it's like the markets are going on sale. The stock market is the only place that goes on sale and people run out the door, not run to the door like we would on the day after Thanksgiving, right? When everything's on sale. It's like, that's the time to buy. So if you can train yourselves when the markets pull back and if you're in that accumulation mode, you want to think about, okay, now is a good time to buy and accumulate in those periods when the markets are pulling back. If you are already retired, like a lot of our retirees are, then your portfolio most likely is already set up to handle the volatility, because we as investors expect that and build that into our portfolios. So number 2, that's what we're going to talk about next here, is diversify your investments to your personal risk tolerance. As advisors, we are trained to understand your financial situation. We understand, okay, someone at a given age with certain assets, with certain goals. We can say, okay, your risk tolerance should be X. But guess what? We're not you. So it's important that your investments are aligned with your personal risk profile. You have experienced different things in your life, and only you can decide what is right. So as advisors, we can guide you to what the right mix of investments are for you. But the bottom line is, if you can't sleep at night, then that's not the right risk profile for you. So it's really to sit down and make sure that you are invested correctly is really critical, to work with an advisor that will do that with you. The other thing is, as we've had 18 months of really good returns in the stock market, it's also really important to make sure that you are still invested to your risk profile. So as stock investments have done well, you become there's more risk in your portfolio now than 18 months ago because the stocks have increased in value. So you want to make sure either number one, you're rebalancing your portfolio. This goes for your retirement plan, all different assets. Most likely, if you're working with us, we were already doing this for you. That's part of how we manage investments for our clients. But what we see often is inside retirement plans at work, when it's kind of a set it and forget it, that your risk profile you get more aggressive, not intentionally, just because the investments have performing well. Not a bad thing until the next market pullback. And then most likely you'll see more volatility during that time. So just something to be aware of. Number 3, maintain your emergency fund. So it's important that you keep liquid savings on hand to handle the emergencies. I think with this pandemic, what it has taught us is we can't even make this stuff up of what will happen in the future. So it is critical that you are prepared for an emergency. So keep 3 to 6 months of your family's expenses. So if it costs $5,000 for my family to live every month, then we would want $15,000 to $30,000 in a savings account at the local bank where we can access it if any emergency arises. I know a lot of Americans don't have this. So, and you're not going to get it overnight. What I would encourage you to do is just set aside a specific amount, $50, $100, $200, whatever you can, from your paychecks that are coming in, and just automatically set that aside into that savings account. And over time, you'll build up to that emergency fund. But the more that we can set up things automatically, the more that will help us with that discipline to do these things. Okay, number 4 is you have not realized the loss of an investment unless you actually sell it. So, when you think about your investments, it is hard to look at your investment statement and see the values going down. But unless you actually sell it on that given day when the market's down, you haven't realized that loss. You still own the same amount of shares in that stock, in that investment, and it fluctuates every day. So patience is an attribute that we need as investors, because as the markets fluctuate up and down, as they do every day, in history, it has recovered. The broad market, not individual stocks, but if you have a good broad market, the market's recovered 100% of the time. We have had over 50 all-time highs in 2021. So the market is resilient. It comes back. That's why it's important to have a wide, diverse asset allocation, a lot of investments in your portfolio. If you are a client of ours, this is again something that we do for you. Number 5, be emotionally attached to your investments. Yes, this is kind of an odd advice, but I really love it. Love your investments. It's okay to love your investments and what you're investing in. We've noticed that clients that inherit assets or stocks, investments from whether it's their parents, their grandparents, they're emotionally tied to those investments. So even when the market is in 2008, when the market was in the Great Recession and it lasted 3 years, they would sell other investments, but they would not sell those investments that they inherited from their family. And I would urge us all to think about all of our investments that way. Like, know what you're investing in, have some passion. These investments, it's like this is your hard-earned money that you're using to invest in something that will create wealth for you for not only your life, for generations. So, think about investing in things that make you happy, that you love, and be attached to them, because it's going to be harder to abandon them when times get tough. So be emotionally attached, love those investments, and have patience. When the markets get a little volatile, as my sense is I think it may have already been happening. Today was a down day, and it will hang with us here most likely through the fall. And it's okay. It's part of the investing experience. You can't have the good without the bad. And so we are here to partner with our clients. We're here to partner with you if you want help understanding your investments, getting into investments that you love, creating a plan around your investments, ensuring that you are investing towards your personal risk profile. Go ahead and head on over to our website. You can schedule an appointment with one of our wealth advisors, whether you are a client and you just want to refresh on what's happening or have any questions that this video has brought up, or if you are brand new to Financial Freedom Wealth Management Group, we'd love to have a conversation with you. Our commitment is to care deeply about you and your financial life, and they go together. And so we're here for you, and hope you have a wonderful day, and look forward to all the fall has to offer.